It's that time of month again. Stats time. End of the month, August for 2024 market stats with.
Marc Rasmussen at Corcoran Dwellings.
And I love sitting with, of course, my COA banker colleagues, but I like to have a different perspective on like what you're seeing in your office too. And yes, we are dog friendly here, so please stay tuned. You know how I like to play guessing games here. I have not looked at the stats. The only thing I saw in here is one of the numbers. So, all right, let's just start soup to nuts. Closed sales. Now, remember, every time I do the stats, we have to look at the month prior. So technically, these are the numbers for July because they take a while to compile.
July 2024, but the numbers I know off the top of my head are just July 2023 versus July 2024. Okay. So you're comparing the two different months.
And I don't know about you, but I like to compare the Sarasota single-family home market because it's not as volatile as the condo home market. Don't you agree?
Condos are yes, I agree. Condos inventories are up both in Sarasota County, 67%, Manatee County up 75%. I think that has a lot to do with the milestone stuff, the insurance stuff.
Oh, yeah, I guess it is.
Because I've noticed over the year, this last year, inventories have risen quite a bit, and I think a lot of that has to do with the milestone insurance. And I don't want to get into that, but Shayla's got videos on that whole milestone thing.
It was soon after Surfside, and they changed the laws. I've got that in my playlist. I checked the playlist about the insurance, impacts of Surfside in the playlist. But since you skipped to inventory, which I like to skip to that too, because it's probably the most indicative of the market, because you talk about it all the time, supply and demand.
Prices are dictated by supply and demand, like most things. And if you have you got a bunch of listings out there, a bunch of new listings out there, of course it's going to affect price. And we're starting to see it. The median price in Sarasota County for single family homes went from it dropped to 470. I don't remember what it was last year, but
535.
Yeah, so it's down 12% compared to last year.
But it's an adjustment for the short term, maybe.
Year over year, we'll see.
We don't know the future. Anybody that says this, that's going to happen, you should probably be wary of people like that because we don't know. We're just going off of like what we see out boots on the ground. He's more on the broker role, but he sees with his agents in the office too. So what's interesting about what you were saying versus the Sarasota County home level of inventory is actually at 4.8 months. It went down. So last time we did Last time we did this video, I wasn't with you, but it was a 5-month inventory. So inventory's gone down.
Yeah. Now, were you comparing it from the prior month or from the prior year?
June was 5 months. Okay. July was 4.8.
Yeah. I don't know. Let's discuss that. We've seen people take their properties off the market in the summer simply because it's just not that busy.
Right.
It could be that. Closed sales are only up 1% when you compare July 2023 to July 2024. I don't think sales are up that much, so I don't know if that ate up the inventory or if it's just people taking their stuff off the market. I don't know.
I have one that's temporarily off the market. Another one probably will be. And if you take it off for 60 days within your own office, it resets to 0. So strategically, because August and September tend to be like a slower month and maybe sellers are gearing up for like removing and then putting back on. Because don't you see like an influx in October?
Yes, generally? Yes. I think people take their stuff off, especially like Longboat Key.
Yeah.
They take it off the market and then they say, let's just put it back on the market later in the year. So that decrease in inventory might be because of that.
But like what's weird is, again, from this time last year, we're still up almost 60% in inventory, but July 2023 was still not a normal market coming off of that high from 2020 to 2021, I think. Pending inventory is down, which I guess could be indicative of an election year and all the things we talked about.
So let's talk about that because every 4 years, we've been doing this a long time. And every 4 years in the election year, especially I think in a vacation home market, you start to see it just gets slow. And I think what happens is like a lot of the vacation home buyers are like, we don't need to buy.
Right.
We want to buy, but we don't need to buy. Let's wait and see what happens until after the election. I hear that. My agents hear that. Every election cycle, every presidential election cycle, we hear that every time. And I think they just want to make sure the world isn't going to blow up or whatever. and then after the election, they get some comfort and they start to look. I think I'm hoping, and I think we'll actually be pretty busy after the election.
I think so too.
Yeah.
I'm hoping there's going to be some pent up demand with like a little bit of relaxation in the interest rates going in a downward trend. And again, people pausing for things that are like the political situation and people figuring out and then, well, these stats are not going to be reflective of the changes in the NAR settlement because it hasn't happened yet, right? And so even August numbers won't be really indicative of kind of what's going to happen. Like if buyers are going to start to go directly to listing agents, if that's going to affect showings and therefore number of sales, we don't know yet. That's to be seen. Right?
That's a good point. I think, one could argue that the market will slow down because if you don't know about the real estate industry, we've been upended with this. A silly lawsuit. So we've had to change everything we do, and a lot of agents don't know how to handle that change in terms of if they're representing a buyer, they don't know which forms to fill out. So there's just a lot of stuff in flux, and that may affect local agents not prospecting and not generating business with buyers and sellers because they're kind of things are in flux in terms of this new lawsuit.
But you know what, I know you and Cobank are alike. We're very well educated on the matter. I've gone through these forms ad nauseum. They've actually changed a couple times.
Pretty exhausting, to be honest with you.
We've had to look at new forms and then they are revised. But just rest assured that this is not our first rodeo. Whether you work with Marc or myself, rest assured that you have a veteran agent in your corner to combat some of these things, whether you're a seller or a buyer. I know it's frustrating for sellers right now too, because days on the market, let's talk about that. Yeah. Days on the market. Time to contract is the one that we want to look at, not to closing, right? We want to get that contract 52 days on average, up 108% from this time last year. But again, kind of hard to compare to last year, 25 days. I always say a truly normal market is about 90 days, wouldn't you say?
In terms of to contract?
Right. From the last listed price to the time you go to contract, 90 days is not that long.
It's 3 months. We're in a changing market. It's hard to describe. In a moving market, whether it's prices are moving to the upside or moving to the downside, a lot of times when you establish your asking price, it's based on historical or past data, which can be, I don't want to say obsolete, but in a fast-moving market, that prior data, which is the sales within the last 2 or 3 months, could be old news.
Well, they used to use, an appraiser goes back about 6 months.
Yeah,
right?
And that could be old news in a fast-moving market. And I'm not saying prices are falling quickly, because they're not. They never fall quickly. Sellers are very reluctant to lower their price, but they'll raise their price pretty quickly.
Right.
You know what I mean? So a fast-moving market to the upside goes a lot faster, but to the downside, it's a lot slower.
Like, whoa.
Yeah, it's a lot slower. It's like, wait, time out. I don't want to lower my price. So things just tend to take a lot longer when prices fall. I kind of think that prices have fallen, and they may be falling, and the sellers and the agents are not responding to it. They don't want to admit it.
So basically, we're in purgatory.
No, we're in a very changing, quiet, somewhat quiet,
and it's summer too. On top of it,
yeah, there's a lot of variables right now. You got the NAR settlement, election year. I mean, we just had a huge run up in price.
We had storms here locally, so that's affected some people, especially beachside.
Yeah,
Insurance.
There's so many variables affecting this, so it's hard to pinpoint. Right. It's hard to tell you exactly what's going on.
But I can tell you this, because I've seen it in case by case personally with the listings that we've had, and that is when you really price a property right from the get-go. It's really hard to do that right out the gate, unless it's a really amazing move-in property on the water.
Most sellers don't do that, by the way.
Most don't.
Yeah.
And I could tell you when you're the first one in a neighborhood of a high inventory market, like you're competing with your neighbors, and you're the first one to just rip that Band-Aid off, it's going to sting so bad. But listen, when you're that first one that pulls the trigger and lowers the price, we had that one in Grove City that Andrew and I listed together, and we started at 2.175. And I said, I think it was at the 3-week mark. And I said to Andrew, I was like, we need to get this under 2 because we're just going to sit and we're going to be in line with the rest of the listings. Well, we had about a 45 to an hour long conversation. We lowered it to just under 2 million. We had it under contract the next day. And almost every property, well, all the properties in that $2 million range or above, or hovering in that kind of comparable price tag area, are still on the market. And it's been over 6 months.
I think in this kind of market, and we've seen this kind of market before with some, obviously with some variations, you have to give the buyers a reason to get off the fence.
Right.
And that may mean an attractive price. Because I think the mindset of the buyers right now is like, I may not buy right now because I think prices may drop farther. They may drop more. So I'll just try to pick the bottom, which is almost impossible.
Well, that happened to a colleague of mine at Cowell. She had her and her husband had a listing on the beach, and I watched all the market activity. They lowered it 500,000, and it ended up selling at 4.3, a big house on the beach. And I later spoke to her. She said, well, we lowered the price, and the gentleman who bought ended up coming in an open house. They had representation, but he came through the open house. And he said, I've been watching it, just like what you said. I've been watching. Now it's at a price where I can, and it closed really close to that last asking price. If not, I think it was full price. But they priced it to move it with that price reduction.
Yeah, and in the luxury market, a lot of when the people are paying cash, they have time to wait, obviously. It's not like I'm moving for my job and I need a place to live. This is, they can certainly do that.
Right.
I think that, I think that if you are trying to sell your house in this market, you have to make it attractive to the buyer.
Well, what would be if you had your top 2 things? If you're telling a seller right now, if we want a listing appointment right now, a marketing appointment, we all want to know what you would tell the seller
in terms of how to sell.
What would be the top 2 things if you had to pick?
Price is number 1. You can't have price. The market is, most markets are very price sensitive. Right. Now, a couple years ago, in like the FOMO market, where we had 35 offers for each listing. Price was, people just wanted to buy, and price didn't make any sense. In a market like this, price is super important. I don't think people are, no one wants to overpay, obviously. The other thing is probably condition, because a lot of buyers don't want to buy a project. They don't want to go in and remodel a kitchen, a bathroom, a whole house. And if they do, they want a good price for it. They're gonna say, hey, I got a bunch of headaches here. I need a price that reflects that. So it would be condition and price, probably.
I have that listing in Venice that is a fixer upper. It's in that 300 sort of range, and it took a little bit to sell. Well, actually, 40 days. That's not too bad.
That's not bad.
We had a lot of showings, and everybody was like, "Oh, the amount of work," and it's listed what it is. I'm not over exaggerating the property. It's listed as a fixer-upper. I've said it in the MLS there. But it took some back and forth with that. And not only do I have it under contract, knock on wood, we're closing in a couple weeks. I do have both sides of the transaction, and I have not 1 but 2 full backup contracts on it. And all of a sudden, people, and we didn't even lower the price. We did lower it once, but that time brought out like the buyers, I guess, and so we ended up.
Did you list it at a certain price and have to lower it to get the buyers?
We lowered it once. We started at $324,900. We lowered it to $312,900, and of course, can't tell you the price yet. But
and that's when it sold.
It's a challenge because they always want to knock you on the price, and I can tell you
because of the condition.
I can tell you. So back to like what we're talking about, the stats here. July average was 93.1% of asking price. So from the time the last listing price to the actual price you closed is 93.1% of that last listing price. And I can just tell you, we're not in this category for the Venice fixer upper. So that's all I'm going to say about it. But you can read between the lines there. They have to make up for the amount of work that they have to do.
Right. Gotcha.
So
if you were representing a buyer right now, what would you tell them? Wait or buy?
I would say first and foremost, now you have leverage to make sure you're with the right agent, because a bad agent can steer you wrong, and especially in a changing market like this with there's so many intricacies of the marketplace, number one, and then the whole lawsuit, we've talked ad nauseum about. Like, now is the buyer's chance to actually sit and interview your agent and figure out what their actual value proposition is. Even in a market where there's a lot of inventory, maybe you're not finding exactly what you want, and they can go out and do the extra things. Once you know what they're going to do and they know what you're going to do, it's a working relationship, which is the most important thing of all. Would be to hire the right agent.
Okay, but in terms of the actual market, would you buy now or would you wait?
I think now is a really good sweet spot.
Does it depend on your situation?
Well, always.
Yeah.
But if I had the extra money right now, I would strongly consider getting a little house with a pool,
buying a rental property, another
Airbnb.
Investment property. Yeah. Okay.
Because the strategy would be maybe, I don't know, a certain number of days on the market, and you start attacking the sellers and saying, hey, I want, they're probably more motivated.
Yeah. You have a lot more leverage than you did 2 years ago. Yeah.
And why wait until the rates go down more, or
and you have to compete with other
more
buyers.
Buyer interest, because you're going to pay a higher price. Get that price down. You can always hopefully refi later if the market. Like, they're not going to go to 2-3% ever.
Not anytime soon. I don't think.
Yeah. Work within your budget. Underwrite a property well within your means. You don't want to be house poor. It's the worst feeling in the world. I don't work with a lot of first-time buyers, but especially for a first-time buyer.
So, sorry to interrupt you. So, back when prices, the last crash we had, which was 08, 09, with the foreclosure crisis, prices dropped significantly. Mm-hmm. And that's because people were overextended and they handed the keys back to the bank. There was a whole wave of people foreclosing. Mm-hmm. Banks had to get rid of their stuff, which means they dropped their price. In this market, it's different, wouldn't you say? Because a lot of people paid cash, or they had to prove that they could afford it, or they put a lot of money down. So we're not going to see that huge crash like we saw last time. At least I don't think so. Would you agree to that?
So I read a statistic. I've heard this statistic over and over again, not just like online, but in listening to a variety of different podcasts. And that statistic is that 40% of Americans have no mortgage on their home. Is that?
I've read the same thing.
So what does that tell you? We're not going to have short sales and foreclosures in that segment. I would hesitate. I've talked to people too, and I'm sure you have too, of people wanting to pull out HELOCs and use that money to buy an investment property. I would say be very cautious of that, if that's an avenue that you want to consider, because if you do take a HELOC, the home equity line of credit, out of your house, take it out with that short-term mentality to just pay it back very quickly. That would be my advice to a buyer wanting to do that. That's an aside, I guess, but people have equity, and I can see why you'd be tempted to tap into your equity.
Sure, but the reason I don't think we're going to see a massive crash like we did last time is because there's so much equity. Would you agree?
Right. That's the point you were trying to make. And I diverted, as usual. But because I actually had that conversation last week with a client of mine, a repeat client, and she was like, well, should I use this for an investment property? And I was like, well, yes, if this, and that. I mean, I'm not here just to sell you a house. I want you to call me forever and like be your advisor. If it's not the right thing for you to do, I'm not going to tell you to do it, and same with you. We're not, it's a transaction, but it's more like a lifelong relationship, hopefully,
Absolutely.
Real estate.
Yeah, for sure.
So anyway, we hope that you find this helpful. Every month at the end of the month, we want to make sure you're very informed, and throughout the year and throughout the month as we kind of maneuver through these interesting times. But we'll get through it as we always have, and it'll all be good. So how do they reach you, Marc?
Marc Rasmussen. My cell is 941-800-5000.
It's also 800 Mark.
No, it's not. That's my old
Oh,
number.
that's your old
That's
number.
my old number. That's
Wasn't
my old
it?
number. Yeah, it was
yeah.
No, it was 812 Mark. Yeah,
812 Mark.
That's my old number. No, it's 941-800-5000.
So when you actually want to sell your property, you can call me. You could call me at 941-544-7690. And I don't really mention it too much, but you can go on my website too. We've got all the videos there. We've got all the inventory there. We've got a new IDX feed that makes it more user-friendly. It's very more similar to Zillow. So go on to my website too at shaylatwit.com.